Hi guys, today I want to talk to you about 4 best penny stocks to buy right now. Let's first discuss what are the penny stocks, what are the advantages and disadvantages, and how you would choose the best ones there. So penny stocks are small company stocks. That normally means they cost less than £1 in the UK or less than $5 in the US. However, definitions of penny stocks vary. Someone considers the definition of the market cap, so that means less than $300 million in the US or less than £100 million in the UK of the market cap. Penny stocks are extremely risky investment. This is the kind of high reward, high risk investments that you always hear about in the news. Like, this company has become a boom. It's become 1000% more expensive than it was a year ago. So investors who got in early on now are millionaires. But what we don't see on TV is the opposite side of it. You might as well invest £1,000 and lose it all, everything, literally the company goes bankrupt. This is just how risky the penny stock investments are. So it will depend on your goals, investment strategy, your age, but I do want to highlight straight away, I'm not a financial advisor and you should really align your investments with your own goals and strategies. Personally, for me, I think you should have some amount of penny stocks. I'm gonna buy some of them. I already bought a few and I'm gonna buy some more to have at least about 10% of my portfolio in penny stocks, but this is just dependent on my own level of risk, because I think it's worth investing a small percentage in these high risk, high reward companies and see if they grow. But the reality is no one actually knows if this company is gonna grow. It's very difficult to predict at such early stages of the company how microeconomic factors, how politics, how external factors is going to affect them. So there are 2 types of penny stocks: over-the-counter penny stocks or penny stocks listed on New York Stock Exchange or Nasdaq. Essentially, over-the-counter penny stocks just have less reporting requirements. They don't need to undergo as many regulatory checks, which might mean one of 2 things. Either they don't have enough money at early stages of the company growth to spend on all these auditors, or they have something to hide, essentially. So the company that's just listed over the counter might be a bit sketchy. In my personal opinion, penny stocks are already extremely risky investments, and buying over the counter penny stocks is just doubling the risk even more, because we don't actually know all the information about the company, simply because they don't post all the information, they don't give you their reports, their actual results, so it's much more sketchy. In my opinion, it's just better to buy a lottery ticket really than buying over-the-counter penny stocks. But it does depend on your level of risk and risk tolerance. So if you think that over-the-counter penny stocks is something you'd be interested in, comment below. The stocks I'm going to be talking about here are all going to be listed on the New York Stock Exchange or Nasdaq, or some other exchange internationally, LSE, etc. But they're all not over-the-counter stocks. So discussing the advantages and disadvantages of penny stock, the major disadvantages is the extremely high risk. So this is kind of high risk, high reward companies. You can lose everything, but you can also earn a lot of money. So buying these penny stocks, or buying penny stocks at all for this matter, does really depend on your risk tolerance profile. The second one is the low liquidity. The companies essentially either at the early stages of their growth, startups, so not many people know about them, so not many people actually buy or sell them, at least not as many as for Amazon or Google. And the last one is very high volatility. So the companies are very volatile. If it costs 10 pence and then some funds were raised and now it costs 20 pence, that's 100% increase in the company price, even though not actually as much capital was raised. But essentially it can go up and down all the time, so you should be aware of this. The main advantages of the penny stocks on the other side are they're very cheap. So if you don't have enough money to buy the shares of companies such as Google or Amazon, because they cost hundreds, tens and hundreds of dollars, you can get penny stocks. They cost less than £1 or less than $5, so they are extremely cheap and affordable. And the second one, you can obviously get a very high reward for the small amount invested. You can literally invest £10, get almost 10 shares of the company, and then if this grows by 100, 1000%, you get very good returns for this. The major trick I normally follow when buying penny stocks is I need to look at the newer industries, not the established industry. If the industry has been, and if the company has been around for a while, like for 100 years, an example is Lloyd's, so the banking industry, and it's still a penny stock, for me it's a red flag. There are still some disadvantages to the company, and there are so obvious the investors don't actually want to invest in it for all these tens of years that the company has been existing. I'm not going to touch a lot on Lloyd's here. I did consider the company when I was preparing for this video, however I decided not to include it in the top 4 for this exact reason. On the other side, some of the newer industry like cannabis manufacturing and production or blockchain also have a lot of penny stocks currently. That makes total sense to me, just because the whole industries are currently developing, they just at their starting point, so obviously they're going to cost much less than they would in the future. So this is the kind of companies I want to look out for. The blockchain companies I didn't consider, just because of how volatile the cryptocurrency market is. The FTX crash caused some other following crashes of the other cryptocurrencies giants, so obviously now is not really great time to be looking at the blockchain industry as a whole. I do think the price is going to go even lower for the blockchain related technologies and companies. So currently I don't want to touch on these companies, but I might create a video later on. In terms of the cannabis production and manufacturing, it's recently been legalized in Canada and it's not legalized in the US yet, but it might be in the future. There are a lot of conversations going on about it, and I think this is the industry that's worth looking into. And in fact, one of the 4 companies that I'm going to be discussing today is involved in the production and manufacturing of cannabis. The first company we'll be discussing today is Sundial Growers. The ticket symbol is SNDL and the current share price as in the day recording this video is $2.08. Sundial Growers is the company involved in the production and manufacture of cannabis and liquor products in Canada. So it's a Canada-based company. Like all the penny stocks, the company is extremely risky. It doesn't have any dividend currently and it doesn't have very good past history of earnings, but it does have very good future forecasts. That's very similar to the other penny stock companies. However, what's different from a lot of the penny stock companies is the company has a very good value currently. Its price to sales ratio is 1.27, its price to book is 0.46, and the company is currently about 35% undervalued according to discounted cash flow model. What should be noted here, the 35% undervaluation comes from its price to sales estimate, because the company doesn't actually have any earnings, which means the company is unprofitable. So the price to earnings ratio is kind of useless here. The company's predicted future does sound very good. Analysts are in very good agreement about plus 65% one-year target share price. There is also 85% predicted annual earnings growth and about 20% predicted annual revenue growth. So obviously, if you predict everything for this company, it all sounds amazing and you would invest the money right now. But we also need to look at the current state of matters, how the company is doing right now. The quarterly revenue growth is 1,500% year on year, which does sound amazing. So the company, the only issue here is the company is early stages, so we don't know if this amazing figure is going to repeat itself. Interesting thing about the stock, it caught some hype back in 2021. It's considered to be a meme stock, which means the company was advertised at social media so much that the investors started buying the company shares, and it drove the share price up. That was back in 2021, and in fact it was so high, it was unreasonably high, so the company didn't actually cost that much, but the people were just buying and buying the shares because it was so widely advertised. So then the company share price obviously dropped to the level it is now, even lower actually at some points. However, what's good about this hype back in 2021 is the company actually raised a lot of cash. I think it's a good thing about the management of the company. So they caught this moment back then, and now they're actually debt free. So they don't owe any money to banks. Apart from being debt free, they also have 753 million in cash, which I believe they are going to be investing in the expansion of the business, because this smart strategy allowed them to get all this cash back in 2021. Now they have this safety net where they can actually invest the money wherever they want, and they don't owe this money to anyone. And lastly, US is still to implement federal cannabis reforms. It didn't yet, so its only market for this company is Canada. However, it's exploring new opportunities in other countries, and in my opinion, US will legalize cannabis soon. So I do think the company is worth investing in now and holding it for longer periods of time, like 3, 5, or 10 years. The cannabis business is new in general, so it is good to get in early, and it's one of those penny stocks that might actually give you some nice returns in the future. The next company is Airtel Africa, ticket symbol AAF. The company just misses on the definition of being the actual penny stock with the share price £1.12. However, I still decided to include it in this video just because the company does offer some nice fundamentals and nice prospects for the future, but it's still very risky if you do want to get more high-risk companies into your portfolio. Airtel Africa is a multinational UK-based telecommunications and mobile money service company which operates in Africa in countries like Nigeria and East Africa. So it does have a very diversified portfolio across Africa, which I personally aim for in my own portfolio. I look at the companies that operate in different markets because that's what makes the portfolio truly diversified by location. The company share price is very volatile, more volatile than the industry, but that's quite typical for penny stocks, so that's something we expect there. The company is also 77% undervalued, which is incredible for just a penny stock startup company, and it offers a nice 3.08% dividend. It actually just started paying dividend about 3 years ago, which I think is the good sign that the company is doing well. Also the fact that earnings do cover this dividend. So the dividend is not super high, it's lower than the industry average, but we do expect some nice stock growth here, except for the dividend as well. So for me personally, dividend is just a nice bonus on top of the prospects I see for the company. Also just want to point out there was some nice insider buying over the past year, and the buying was often actually at the higher prices than it is now. Obviously it's not the first thing to look at when you're building your portfolio, but it's kind of a nice to have for you. For the half year that ended on the 30th of September, the company published its report and it has some nice points there to take a note of. So the total customer base increased by 135 million customers, that's up 9.7%. Also, there was a strong revenue growth across all 4 reporting segments in constant currency. This is the key factor here. The net profit decreased by 17.2% to $133 million. However, if we exclude the high foreign exchange costs and derivative losses of $160 million, the net profit was up by 30.4%. So the company has a majority of its customers in Africa, so obviously foreign exchange fee does take a very big influence on the company's profits. However, in my opinion, the company still has a very nice prospects. Its revenue is still growing. Yes, the exchange fees and derivative costs take a very big effect on the company's profit, but it still has a very nice future prospects. For example, it recently partnered up with Meta and Saudi telecom company to extend to Africa Pearl subsea cable to Pakistan and India. This subsea cable provides internet to over 3 million people, and it covers Middle East, Africa, Asia Pacific, a lot of different regions. So I think there it has some nice potential to grow across the world, especially in partnership with such giant companies as Meta. The main disadvantage of the company, it operates in less stable economy of Africa. A lot of things can happen there, so the exchange fees is just one of the things that affects the company profit, but the political situation within the countries can actually change to the worse for the company. Another disadvantage is the volatility, but the volatility is kind of similar for all penny stocks. It's just going to be a constant disadvantage for all penny stocks. The company is very volatile. In fact, you can see on the graph it's been increasing, decreasing even over the past year substantially. Lastly, the company does pay a nice dividend, and the fact that it pays dividends to me is already a big advantage. However, dividend is not very stable. It's been decreasing. It's only been introduced a couple of years ago, and it's already managed to decrease somehow within this couple of years. So we don't actually know if the company will be paying the stable dividend over the next years. I wouldn't rely too much on the dividend. I think the major growth you expect here is actually in the company's share price rather than in the dividend stability and growth. The next penny stock we'll discuss today is Alphawave IP Group, ticket symbol AWE, and the current share price is 98 pence, so just below $1, just gotten to actually be in the penny stock. The company designs, sells and manufactures connectivity solutions and high-performance semiconductor chips. The semiconductor industry has been hit this year in general. It fell by about 31%, and it hit the company as well. So the company is currently about 74% undervalued according to discounted cash flow model, and the 1-year analyst target price is plus 153% to the current share price. So this is some incredible values, and I do think the semiconductor industry has a lot of potential for growth. The industry has actually been growing more than the market, and the company has been growing more than the industry. So we expect there some nice growth over the next years, especially from these bottoms it's hitting now. Semiconductor chips are in all the devices we are using, like smartphones, laptops, tablets. So we will be needing them. I can't see them going away within the next couple of years. Within the next decades, to be fair, and the company won some awards in this industry as well. For example, it won the Deloitte Technology Fast 50 and North American Technology Fast 500 awards in 2022. Then in the past quarter, the quarter-on-quarter revenue actually dropped, but if you consider year-on-year results, revenue increased by 107% and earnings increased by whopping 15,600%. The company share price kept on dropping for various reasons. It had some delays in publishing the financial reports, then there was some disclosure issues that Financial Times published, and then the company share price suddenly dropped. Then there were some delays in acquiring Open5 business, which I will discuss just in a second. But due to all these delays, the company share price kept on dropping, and it just feels like it forgot to recover back up, because all the issues are actually now gone or partly gone, but the company share price is still highly undervalued until this moment. One of the issues, for example, was the acquisition of Open5. So it's another semiconductor company which did offer some nice prospects, and there were multiple delays with acquiring the company, but just in September 2022, AlphaWave actually acquired Open5, so the company now has even higher predicted growth and predicted revenues for the future. Talking about disadvantages, I'm not going to repeat all the same disadvantages that you've heard for the other penny stocks. They're all going to be the same. In addition to this, there is also quite high level of debt. So the debt to equity ratio is 1.43, but the current ratio is still about 15. So I think in general, the company's financial health is really good. I wouldn't worry about it as much. And the next company is Deutsche Aktiengesellschaft. So I did my best with my German there, which I never actually studied. So if anyone speaks German, please correct me. The ticket symbol is DEZ. It's probably easier to find the company by its ticket symbol. And the current share price is 3.99 euros. As you probably already understood, the company is based in Germany. This penny stock manufactures diesel and gas engines, and it operates across different regions such as Africa, Middle East, Asia Pacific and both Americas. Last month the company published its quarterly result, and investors were quite impressed with them. The share price actually jumped by 2.7%, but still the company is about 62% undervalued, and its 1-year analyst price target is plus 61% to the current share price. To top this all up, the company also pays a nice dividend of about 3.73%, which is quite unusual for a penny stock in general, especially for such an undervalued penny stock as Deutsche company. The company revenue growth is 15%, earnings growth is 64%, and also the company is developing in all the right areas in my opinion. So it's currently going into actually using the biofuel for its engines and alternative energy sources, which I think is in general a good thing for the climate, yes, but also with the limited availability of the traditional fuels and the high price of the traditional fuels I think is the way forward to actually develop the engines that's suitable for these alternative fuels. For example, just in December 2022, the company approved the engine for hydrotreated vegetable oil biofuel, which does say about its commitment to its long-term sustainability strategy. The main risk factor for the company is the dividend is not well covered by the cash flow. The company is actually paying dividend with no free cash flow, which I'm not sure why they're doing this. I don't actually think the dividend is the reason I'm buying the company. I don't really care about the dividend. I'm more focused on the long-term growth of the company. The dividend is a nice to have, but if in the future they decide they can't pay this dividend anymore because it's not well covered, I don't really mind, but you might want to reconsider depending on your strategy. I also want to give an honorable mention to another company which actually just missed on being the penny stock. Its current share price is £1.9, and the name of the company is Zoo Digital Group, ticket symbol ZOO, and it has nothing to do with the animals, unexpectedly. The company provides cloud-based localization and digital distribution services in the United Kingdom and United States. I'm just gonna throw some numbers at you about the company because I think it is great investment. So that's all for today. That's 4 penny stocks and 1 honorable mention that I want to discuss with you today. All the stocks have very good potential. However, they're all very risky, so they may go up, they may go down. I don't know the future. I'm not a financial advisor, so you should really, based on your own risk tolerance and your investment goals, decide whether the stocks are suitable for you. Thank you for watching. Don't forget to subscribe, hit the like button down below, and comment on the penny stocks that you think are good investments right now.